Mr. Koza? Mr. Koza just joined us on the platform, Chair. Those are all members currently on the platform, Chair. The others may still join us, Chair. Thank you.
Thank you very much. Can we then share?
Chairperson, good morning. I'm present.
Thank you, Member Mskasa. And then can we have the agenda flighted? Can we get a mover and seconder for the agenda?
Thanks, Chair. I move that we adopt the agenda.
Thank you, Member Mdluli. Seconders?
I second, Chairperson.
Thank you, Member Mskasa. Agenda having been adopted. Are there any apologies, Andre?
Chair, I've not received any formal apologies, Chair. So I'm assuming other members will still join us, but I'll communicate any apologies to you as soon as I receive it, Chair. Thanks.
No, thank you very much. You are welcome. I'm sure that the delegation is led by the Deputy Minister. Is that correct, Andrew?
Correct, Chair. Deputy Minister is on the platform together with Ms. Motomela. Thanks.
Okay. Thank you very much. Welcome, Deputy Minister and the team. The purpose of the meeting today is for the committee to receive the briefing from the NCC as well as NCR on their first, second, and third quarter financial and non-financial performance, given their available resources for 2025-26 financial year. An oversight of their performance is an extension of Section 5 of Money Bill Amendment Procedure and Related Matters Act Number 9 of 2009. This section of the Act requires that the National Assembly, through its committee, to annually assess the performance of each national department over 18-month period and submit a report of this assessment known as Budget Review and Recommendations, BRRR report. I will now afford an opportunity to the Deputy Minister to introduce the team and the topic, and over to you, Deputy Minister.
Good morning, Honorable Chairperson. Good morning to the members of the Portfolio Committee and the support staff on the platform. I am the one who's leading the delegation as explained by you, Chairperson, and I'm accompanied by the heads of the two institutions. So I have Mr. Hadin Rachisusu from the National Consumer Commission. He is the acting head. His substantive post is a deputy commissioner at the Competition Commission. I also have the acting CEO of the National Credit Regulator, Ms. Lynette De Beer. And then, of course, we are accompanied by officials from the Department of Trade and Industry, who are led by Ms. Matomela, as explained. The chairperson has already explained the context of the meeting. I am just going to try introduce the report of each one of these entities. As per the agenda, I will start off with the National Consumer Commission. For this purpose, Honorable Chair, I want to highlight that the National Consumer Commission plays a very, very vital role under the Consumer Protection Act, and its function is to safeguard consumers and to tackle unfair business practices, to deal with issues of unsafe food, and all prohibited conduct that affects consumer welfare. But at the same time, it has to pursue its work in a manner that supports industrialization and fair competition in the market. One of the key things that it does is enforcement of rules and pursuing consumer redress. And in the period under review, the National Consumer Commission resolved about 395 matters in these quarters that we're reporting under, and they've secured consumer redress to the amount of 11.2 million rands. All of these were related to addressing scams, misleading conduct by market players, dealing with unsafe products that would lead to product recalls as well, and then pushing back against non-compliant imports. This was done through the deployment of administrative penalties, issuing compliance notices, and pursuing suppliers that are engaging in prohibited practices to hold them accountable for such. And a notable achievement was the settlement concluded with the company called We Buy Cars, which included an administrative penalty of 2.5 million rands, and the consumer redress there was 3.4 million rands that affected 31 consumers. And there was also a commitment to create 300 jobs over 5 years as part of that settlement. And that outcome on its own, the one of We Buy Cars, demonstrates how enforcement can be both an instrument of accountability as such, but also could have a developmental impact if the settlement includes investment commitments on the part of the company that is under scrutiny. Now, the head of the institution will go to the detail of the work that was done across the board in that regard. I thought I must highlight just those issues in order to frame what the substantive work of the entity is. Now, that is the National Consumer Commission. The National Credit Regulator, on its part, Honorable Chair, is one of the most important regulatory institutions we have in the South African financial market ecosystem. And its work in that context is essentially to safeguard the integrity of South Africa's consumer credit market. And its mandate comes from the National Credit Act, and it is set up to promote fair, transparent, accessible, and inclusive credit system. And that is explained as balancing expanded access to credit on the one hand with robust consumer protection and responsible lending. And that mandate is very important to note because the two objectives of pursuing expanded credit access for consumers on the one end and the threat of irresponsible lending on the part of financial institutions tend to be at odds, where the objective of expanding credit access gets abused to create a situation of high indebtedness in the consumer market because of lending practices that are predatory in effect. So the National Credit Regulator has the goal of intervening in the credit market in order to preserve the integrity of the credit market, one, expanded access, two, but to be careful not to have that being done in a manner as to put consumers in the line of fire. And this is true of the conduct of both formal institutions and the non-formal ones, such as your loan sharks and so on. One of the issues that the National Credit Regulator works on is the credit market overview broadly. And the credit market is quite a complex credit ecosystem. That is credit providers, debt counselors, credit bureaus, and all other associated registrants. And the scale of this oversight responsibility underscores the importance of regulatory vigilance on the part of the NCR, particularly in a credit market that continues to evolve in both size and sophistication. So recent data published through the Consumer Credit Market Report and the Credit Bureau Monitor reflects that there's growth in credit active consumers. We've seen increased levels of new credit being granted. There's improvement in consumer standing ratios. Now, these trends signal both recovery and expansion in segments of the market, but they also heighten the need for effective supervision to mitigate over-indebtedness risks. That was just to give a sense of the work that the NCR has to contend with in the context of an increasingly evolving consumer credit market. We are all familiar as members that these days, when you open your phone, if you open your banking app, you are probably going to see that you are eligible for credit depending on your earnings. And if you think about the members of parliament here, you would probably see that without filing a single application, just from the capacity of financial institutions to track your financial standing and your financial performance, you easily are given a potential exposure of debt that could be above R1 million at the click of a button on your phone. It's an overdraft, it's a temporary loan, it's a short loan, it's this, that, and the other. That innovation, these advances in fintech are both an opportunity for expanded credit access, but also a strategic risk that can get a lot of consumers to find themselves heavily in debt and in no way being able to repay those debts in an economically sustainable manner. So that is what the NCC report will be about. They will give an indication of the work done in the period under review with respect to the mandate that I was highlighting. So, Honorable Chairperson, I noticed that the agenda flow says we'll start with the NCC. So, with your indulgence, I will ask that we allow the head of the National Consumer Commission, Mr. Hadin Rachisusu, to start off with going through the presentation of the entity. Thank you very much.
Thank you, DM. Let's follow that.
Thank you, DM, for the kind introduction. Good morning, Honorable Chair and Honorable members of the committee. I hope my screen is sharing. I hope.
You have sharing rights, but we're not seeing your document.
It's not showing.
I think Hadin, you must switch off your video first and then try share. Maybe it will work.
Because I better load this thing.
Just switch off the video first and then share the doc. Yeah.
Yeah. Okay, let me do this because I close now. It's gonna switch off now completely. Yeah. Let's do this. Okay, let's do there. I think so. Thanks, DM, for that. So this is, I hope, yeah, this can show now. I hope I can proceed without the video. Chair, is it fine? Yeah,
I think it's fine.
Yes, I will present the National Consumer Commission financial and non-financial information for quarters 1 to 3 for 2025-2026. I'm joined by the executive of the National Consumer Commission. They are listed there. I will not go through each individual names. I'm also joined by the CEOs of the Consumer Goods and Services Ombuds, as well as the Motor Industry Ombuds of South Africa. The presentation will flow in this way. We'll start with the mandate briefly the vision, structure, highlights, objectives, the impact briefly of the Ombud schemes. I've added this in this presentation because I think this is one area that we do not often talk about. The human resources, financial information, opportunities and emerging risks, and then we'll conclude. The National Consumer Commission is established in terms of Section 85 of the Consumer Protection Act, Section 85 rather of the Consumer Protection Act of 2008. The purpose is to promote and advance the social and economic welfare of consumers in South Africa, and in particular low-income persons or persons in low-income communities, those persons who live in remote, isolated or low-density areas, minors, seniors, or other vulnerable consumers, and those that are illiterate, vision impaired, or with limited fluency in the language the information is presented. The Act seeks to protect consumers from unconscionable, unfair, unreasonable, unjust, or otherwise improper trade practices, and with a view to promote a fair, accessible, and sustainable marketplace for consumer products and services, and establish norms and standards relating to consumer protection. The National Consumer Commission has concurrent jurisdiction on consumer protection matters with the provincial consumer affairs offices. And our mandate, as I've said in the introduction, is supported by sector ombuds, being the motor industry ombud of South Africa, and consumer goods and services ombud. Our vision is a marketplace for consumer goods and services that benefits consumers and contributes to economic growth, industrialization, and sustainability. And the mission is to curb unfair business practices for a fair, safe, and sustainable marketplace for consumer goods and services. And our values: fairness, integrity, and good corporate governance. These are structured, these are executive team, as I've introduced. Then we'll go to the highlights for the 3 quarters for 2025-2026. Quarter 1, we had 15 applicable targets, achieved 14, so our performance was 93%. Quarter 2, 17 applicable targets, achieved 15, that was an 88% performance. And in quarter 3, 17 applicable targets, achieved 16 of those, and that was a 94% performance. I will touch on the highlights broadly, but I must note that while, of course, some targets were not achieved, the NCC interventions remained impactful, particularly in contributing to the government's industrialization goals, curbing prohibited conduct, and advancing advocacy initiatives targeted at business, consumers, and other stakeholders. This is the table that summarizes the performance in detail each quarter, but I'll narrate this shortly. The same with this one is just to talk to the individual companies that were fined. The NCC, through its investigation and enforcement activities, has obtained redress for consumers, and DM has already touched on this. It's redress to the amount of 11,220,533. So this was through the resolution of 395 cases during this quarter. We also had matters before the court which were decided in our favor. So in total, we secured administrative penalties of 3.9 million. We also, during this period, prevented non-compliant imported CTFL goods, which is clothing, textile, footwear, and leather goods, to the value of 4.5 million rand. So we looked at 64 consignments. These are the goods prevented from entering the South African market. We do this by way of a regulation published in terms of the Consumer Protection Act in collaboration with the South African Revenue Services. We concluded 14 investigations into Ponzi schemes, resulting in a preservation order of 4.5 million. And in this period also, we secured a forfeiture order of just about 9 million rand. So that's returning these illicit monies gained back to the state. This we do in partnership with the NPA and the Asset Forfeiture Unit. We issued 136 compliance notices against suppliers that supplied non-compliant goods. This include expired food with no date markings, sometimes non-display of prices, and not honoring the general terms and conditions of sale. I will briefly go through some of the key cases that we finalized, some cases that they have been initiated as well. But the main case that we finalized during this period is We Buy Cars, as highlighted already by the DM. So the National Consumer Tribunal confirmed this as a order on 19 December 2025. So this was to address a number of complaints we received from consumers, and We Buy Cars have agreed to revise their terms and conditions to align with the CPA. And the main issue here has been the application of the so-called food stewards provisions, which are expressly prohibited in terms of the Consumer Protection Act, unless those defects are disclosed upfront to the consumer. There's also the implied warranty of 6 months that consumers are entitled to in terms of the Consumer Protection Act, which was not being honored. So we have an undertaking that they will amend those terms and conditions. They've agreed to a consumer awareness program to deal with the issues that I've just highlighted, specifically in the used motor vehicle space. They have committed to create 300 job opportunities over 5 years. So this is to enhance their customer service capacity and overall consumer experience. The value of this job is estimated between 180 million and 195 million. So this is what the company will spend. They refunded consumers, 31 consumers, just about 3.4 million rand, and then penalty of 2.5 million rand. In our view, this matter will change the landscape of the second-hand car market in South Africa, and the NCC will continue to monitor the implementation of the settlement agreement. We have one case, another case, House of Natural Butters. We fined the company 500,000. The investigation was on the distribution of contaminated and decayed peanuts and related products from Malawi and Zambia. So there were some issues, and which resulted in us recalling, the peanut butter that was produced out of those nuts, and we ended up fining this company some amount for violating the Consumer Protection Act. We have another case that's ongoing Elgin fruit juice. This relates to the supply of apple juice concentrate, which had levels of pathogen that exceeded the limits set out in Regulation 2E of the Foodstuffs, Cosmetics, and Disinfectants Regulation. We are investigating this in terms of Section 55 of the Consumer Protection Act. So the case will be filed with the National Consumer Tribunal. We filed this case, excuse me, Chair. There is Dolkelum Pty Limited. We found this company based in Ekurhuleni was engaging in prohibited conduct, including defacing and altering product labels, changing date markings, marketing products with fictitious dates, selling foodstuffs with labels in foreign language, and no certificate of acceptability. So we have decided to refer this matter to the National Consumer Tribunal, and this was an operation which involved various stakeholders, including the police, as well as the municipalities. We have an investigation underway against Shane and Demo. We initiated this investigation to look into the practices relating to marketing of goods to consumers, terms and conditions underpinning related transactions, and provisions of redress to consumers in case of aggrieved consumers. So the main issues under investigation include the following: pricing, promotional claims and advertising, receipts, invoices, disclosure, returns and warranties, product safety, labeling and quality, e-commerce controls, digital conduct and data handling, and delivery, cross-border shipping, customs and logistics. So these are the issues that we are looking at in how our consumers in South Africa are potentially affected by these online platforms. But this investigation is ongoing. We have an investigation against Tracker, which we initiated again during this period. This is focused on terms and conditions of the supplier, particularly relating to cancellation of contracts, as well as the way in which the supplier engages in direct marketing. This is ongoing. We have an investigation against Massmart Builders Warehouse, filed by a complainant. We initiated this investigation. It is alleged that a drain cleaner supplied by these suppliers contains a chemical solution which is unsafe and poses a risk to consumers. So we are looking into this matter. In the ordinary course, we would expect the company to notify us to recall such unsafe products, but this has not happened. So the NCC is looking at this. We have a case against Pepco Trading Pty Ltd, trading as Phonium. This investigation is focused on terms of the contract, which are alleged to be unfair and unreasonable. It is alleged that the supplier offered contracts to consumers on terms that were unfair and unreasonable. In particular, the contract prices were reportedly exponentially higher than the actual value of the handsets supplied, potentially disadvantaging consumers. This investigation is ongoing. I think, Chair, we got this. There was a query from the Portfolio Committee on this particular issue, and we followed up on it. We administered product recalls, 77 in total, to ensure that consumers receive goods that are of good standard, free of defects, and safe for public consumption. Majority of these recalls relate to motor vehicles. It is important for the NCC to respond expeditiously on product recalls to prevent any harm that unsafe products may cause to consumers. This is just a breakdown of the suppliers affected. You can see it's mostly motor vehicles, so Stellantis, Mercedes, VW, Audi, Honda, Ford, and a few others. These are the products. Again, we just illustrate what I've just said. Now, on education and awareness, we have this highlight to note, and honorable members, that the United Nations has adopted the principles for consumer product safety. This was done on 15 December 2025. South Africa, together with Brazil, Costa Rica, Peru, Spain, and Sweden, had sponsored this, noting the global risks posed by unsafe products, particularly in the context of cross-border and online trade. The principles provide a global framework to strengthen product safety governance, promote international cooperation, and enhance consumer protection across markets. Their endorsement at the 80th session of the General Assembly reflects broad support from both developing and developed countries for stronger coordinated action on consumer product safety. We held a G20 seminar with our counterparts in the EU, Consumer International, UNCTAD, COMESA, and our local stakeholders. We had the Deputy Minister is with us today. He gave an opening and keynote address there, emphasizing the broader mission to strengthen consumer protection and competition regulation in the context of rapid digitalization and the expanding global trade. We hosted China Automotive Standardization Research Institute and the China Automotive Technology and Research Center. This we did together with the NRCS and SABS. So the engagement focused on information sharing regarding compliance with applicable South African standards, compulsory specifications, and product quality requirements governing the automotive industry as regulated by these three institutions. We do participate in various events. We were in Mpumalanga for the Spend Wisely, Live Securely, Your Money, Your Future campaign. This was in December to raise awareness to consumers, and it relates to the issues even around credit and responsible spending. We also hosted the delegation from Egypt's National Food Safety Authority, and this is really, us strengthening collaboration with our counterparts, particularly on issues pertaining to food safety. We made a submission to the National Treasury and SARS regarding amendments to the Value Added Tax Act 1991 and Customs and Excise Act, Act of 1964. The submission focused on strengthening compliance, enforcement for low-value imports, achieving a balance between simplifying customs procedures and maintaining robust enforcement measures, and enhancing the accountability of international goods transporters. So this is in line with our focus on e-commerce to ensure that offshore e-commerce suppliers do not have an unfair advantage over local suppliers. Our strategic objectives, targets, and actual performance, I've already provided the highlights, so I will not go through each one of these. Safe to note that our goals, strategic goals, is really to contribute to industrialization. curb prohibited conduct, enhance education and awareness, and improve service delivery efficiencies. So all of these with a view to, addressing the high cost of living and ensuring that we are and continue to be a capable state. What informs our performance is these 9 priority areas that we have targeted, which are unsafe and expired foods, second-hand automotive industry, unfair and unreasonable pricing of goods and services, unfair and unreasonable terms and conditions, non-compliant clothing, textiles, footwear and leather goods, market monitoring of low quality and substandard locally produced or imported goods, false claims on carbon-friendly goods, so-called greenwashing, scams and Ponzi schemes, and e-commerce. These, in our view, are quite important to address consumer concerns in our country. So I will not go through each, this is what our APP outlines for the year. It's 20 targets that deal with each one of those focus areas. The performance, we've provided a summary of the performance, the key highlights, and this is just to reflect, how we reported this when we submitted our quarterly reports. Now move to the impact of activities of OMBAT schemes. The Minister of Trade, Industry and Competition accredited 2 OMBAT schemes. It's MIOSA and CGSO. We have them here. They are quite crucial as an alternative dispute resolution mechanism in our consumer protection ecosystem. So we identified in our strategy that it's important that we work much more closely and monitor the work of the OMBAT schemes. And you'll see the OMBAT schemes do resolve a lot of cases in our system. So what you get to the NCC is usually these contested matters that suppliers are refusing to address, which then take long to resolve at times. So you have cases received by the CGSO. These are the statistics year to date, these 3 quarters, and the case is closed. 11,000 received, closed just 9,401. That's in 2025, and then in prior periods you can see. But you can see that there's an increase, 26% increase on cases received year on year. This is the redress we are able to secure through the CGSO. They deal with a lot of consumer transactions. So these are small individual consumer transactions where someone is buying their cell phone, food products, and so forth. So it's these cases that then lead to this kind of redress you see. In the quarters to date, you can see they have really improved. We have 9.2 million in redress to consumers, an improvement from last year. Now we have MIOSA. MIOSA, you can see the volume of complaints slightly lower compared to CGSO, but these are usually motor vehicle claims that are before the MIOSA. So these are large transactions by nature. So you can see in the value of redress that MIOSA has been able to secure in these quarters, so which is totaling 61.8 million. There are challenges that the ombuds have identified, but it's really, issues around, consumer awareness, sometimes suppliers not complying with their resolutions and so forth, and also suppliers that are refusing to join these schemes. That will apply broadly also for MIOSA. Now, human resources, we have 71 funded positions as the NCC, with a vacancy rate of 17%. We have complemented our staff profile with youth graduates. Some were funded ourselves, some funded by PCTA and the NYDA. Financial information, Chair, we have this picture of the history of budget allocation for the entity, and we're seeing a decline, Chair, but as you can see, the mandate and responsibilities and the kinds of cases we're dealing with are increasing in complexity and volume as well. This is what we show how we most our budget is a grant. We augment that, with the interest. And this year already the DTIC, looking at our financial situation, have already added 2 million to our baseline. We have made another request to ensure that we cover a lot of other expenses for this year. This is how we spend our money. The bulk of it is the compensation of employees, because we run an operation of inspectors. It's inspectors on the ground to investigate cases. So we are, by design, human resources heavy. So this is just an update, 10 members on the expenditures. We have retained surpluses, but the surpluses are depleting. I don't think when we end this year, the forecast is that we may not have, additional, room to move, particularly on the surpluses side. But this is a discussion we're having on an ongoing basis with the DTIC. So I will not go more on this, Chair. Now, what are the opportunities? The main opportunities for us this financial year is the implementation of the opt-out registry system as per Section 11 of the Consumer Protection Act. This will enable consumers to preemptively block unwanted direct marketing communication from direct marketers. Direct marketers are required to consult the registry at a fee to determine which consumers selected not to be contacted for direct marketing. This process, so the minister is considering the final set of regulations. So this may be published this financial year so that we can implement the opt-out register system. Emerging risks that we face as the entity is cash flow constraints due to budget cuts and growing mandate, inadequate human resources, significant number of appeal matters against the NCC. These matters result in an increase in legal costs. As we go to the higher courts, we need to retain counsel to defend our matters and the consumer interests. In conclusion, Chair and members of the committee, despite challenges, the NCC achievements were impactful to the consumers. Consumers have obtained redress through the intervention of the NCC and accredited ombud schemes. Despite emerging risks, the NCC continues to enforce the CPA to ensure consumers in South Africa are protected from unfair business practices. Thank you, Honorable Chair and honorable members. This concludes our presentation. Deputy Minister, I pause here.
Thank you. Can we have the next presentation from NCR?
Good morning, Honourable Chair and members of the Portfolio Committee. Also, good morning to my colleagues and especially to Deputy Minister Kotlimpi and the DTIC team. I'm also here assisted by my team from the NCR. If you are able to see my screen, I can just quickly introduce my team. I have with me my CFO, Ms. Philippine Mweli. I have also my company secretary, Mr. Ngwaku Mabeba, and we have Tsafiwa Belogo as our corporate services officer, COO. And when I introduce the meeting and will go through the presentations, some of these questions may be answered by the team themselves. However, I'm going to take you through the presentation, if that is in order. Can I confirm that everyone can see the screen and the presentation? Right, it seems like there is no complaint, so I'm going to move into the presentation. Honourable Chair, we are here as the NCR to present our first, second and third quarter financial and non-financial performance for the financial year 25-26. We are going to cover the topics as you have noted in the contents. It is included of the vision, mission, our mandate, the landscape of the credit environment, and the registrants, our priorities for this financial year, talking to the APP performance, and then move into what stakeholder collaborations we have entered and the enforcement we have conducted throughout the year so far, including then the research and statistical analysis, and finalizing and ending with the financial information report. So as you are aware, the NCR and has been introduced by Deputy Minister Kotlimpi as being the entity in South Africa that enforces or has the mandate to promote and enforce the fair, non-discriminatory marketplaces for access to consumer credit. In main, it means that we have the responsibility to prohibit reckless credit granting, making sure that our consumers of South Africa has access to a responsible credit market. Our mission this year, we have amended slightly from the previous financial years. For the first time, I think in 10 years, we have amended our mission to include a empowerment section at the bottom to create an enabling environment for South Africa. And that is in essence meaning, as the NCR, we would like to be more sustainable through financial, but also through other initiatives. We are the registrant and we are licensing registrants as indicated by the introduction. We are licensing credit providers, debt counselors, credit bureaus, payment distribution agencies, and alternative dispute resolution agents. We have the majority of the credit providers listed in South Africa. However, all the banks are also licensed to provide credit in South Africa, especially the corporate banks that you are aware of. We have a small number of debt counselors that is responsible for the debt review function within the NCA. And then we do have 53 credit bureaus, which is quite a significant number. However, only 5 of them are allowed or hosting credit bureaus, and those are the ones particularly important for the credit sector in providing credit reports to the credit providers in assessing credit risk for consumers. On the next page, I'm just going to touch on our top strategic priorities for the year. And because this is our first presentation to the Portfolio Committee, I'm going to try and be as detailed as possible. For the NCR, our focus for this year will be on the priorities within the MDTP. We have inclusive growth and job creation, the reduction of poverty and tackling the high cost of living. The priority 3 is to build a capable, ethical and developmental state. And through those 3 priorities, we have allocated our 3 programs. As I mentioned earlier, we used to only have 2 programs, which was the improved regulatory environment and enforcement of the NCA. And through this financial year, we have added a 3rd program called the Sustainability, Environmental, Social and Governance Framework. Program. Under the impact that we want to create through these 3 programs, for the regulatory environment, we want to create the impact of an improved regulatory environment, which then promotes the economic growth through educational awareness and facilitation of job creation. Also then to align to the 2 priorities to reduce poverty as well as tackle the high cost of living. Now, this used to be our main driver, and through that we have established educational awareness activities. We've always had that. We joined our services also with Mr. Hardim's team, the NCC. However, we also have cross-functional relations with other departments, and especially the National Treasury. We do work very closely with them for aligning with the FSCA and the Prudential Authority in our awareness activities. On Program 2, we have enforcement of the National Credit Act, and the impact we want to create there is to create a fair, responsible access to consumer credit market. On sustainability and environmental, social and governance program, our aim here is to create the impact for improved long-term value. Whilst we would like to minimize our ecological footprint, we also would like to foster inclusive communities, especially where you are known that most of our communities are not in the central CBD environment. We have to reach everyone where they are. So we'd like to bring in and foster those inclusive communities and ensure that the highest level of ethical services is delivered by the NCR. So through that, the NCR contributes then to 5 of the TTIC's 10 core output targets, and that includes work experience that we create through our intern recruitment process, the MSME support that we mainly support in this financial year through the regulatory review process on business credit reporting. We have done transformation through this core output targets, red tape reduction through our registration process, and assistance farmers through our MSME support program, which are closely linked to one another. Again, through the APP, just brief here, also through the annual performance plan, we've identified outputs and indicators and targets that aims to achieve that MTF period targets. The addition to our improved regulatory environment, we are also focusing on development of this educational strategy, which is really important for us in this environment. To enable financial literacy through our consumer protection program. We want to establish the financial sustainability of the entity. Through that, we have done quite significant work in developing research for a new benchmark and funding model process, trying to find new and additional revenue streams to support the sustainability of this of the NCR. We also create innovative collaborations through resilient workforce. And also, again, this year, we have engaged to develop a culture framework for the NCR and bring everyone together as one workforce and to provide also the resilience and capabilities of that workforce to assist them to be a close-knit family. We are again through that process. The 5 core outputs of the DTIC that I referred to earlier are covered through those few indicators that I've listed here. So the 5 core outputs that we support the DTIC with is included in the proposed regulation amendments, as I mentioned earlier, that is linked to your MSME and subsistence farmer projects. We conducted the consumer education awareness campaigns. We conducted impact study assessment on activities relating to the educational awareness, investigations, complaints, evaluations, complaints monitoring, and debt counseling and enforcement environment. So on an annual basis, we prepare an evaluation report to see how our training and awareness activities impact the consumers that we trained. And then we follow through at the end of the period. I think we do it on a 3-year cycle. We actually get a service provider in then to review those and assess those reports to provide us with improved mechanisms that we can establish to ensure that we do get and reach those communities for education and awareness. We also do those workshops, and mostly the workshops are focused on new registrants to bring them into and assist them with the compliance to the NCA. And it's very helpful, especially most of those registrants are small businesses. They don't have the means to pay for highly qualified support services. So this is very helpful to them to understand what we expect from them. We also registered 98% of our entities that applies to the NCR for registration within 6 business working days. Sorry, business days or working days. So that is important because, you know, we would like those registrants to be onboarded as soon as possible. And that supports the red tape reduction initiative from the DTIC. We issue on a general basis 4 circulars. We'd like to do more. We often do more, but the minimum is 4. We do 4 circulars and guidelines throughout the year under Section 16 of the NCA. And 75% of our procurement goes to qualifying, to MSMEs. So qualifying purchase orders are those that we agree in the beginning of the year, and mostly our procurement goes to small business development. Developing of the implementation plan, and that is what we've done on the diagnostic study report, is to support the business credit reporting framework within South Africa. That report is close to finalization. That is a research project that we undertook to support the regulatory review that we have presented to the DTIC in Q3. Then we did a feasibility study as well on the establishment of a credit register under Section 69, which is important for policy development for the Minister and the DTIC. In essence, what this means is that once this is established, the NCR can provide support to the DTIC through policy engagements to develop new and improved policies that will support transparency within the credit industry. From that register, we are envisaged that we would be able to closely monitor those that are, you know, entering into reckless lending, and avoid or can provide high or early alert notifications on those industries that are invested in credit markets. That's a valuable tool. I think the consideration would probably end up, and I think at the end of the day, it's going to be a decision made by the Minister for us as the NCR to continue or not with the implementation thereof. We are concluding now the educational strategy plan that is aligned with the National Financial Inclusion Strategy that sits under the National Treasury as the custodian. But as the NCR, we are participating in that project, and as the NCR, we are one of the few entities that are included under the financial regulatory, the FSRA. This is the act that encompasses all the regulators in the financial sector. We do meet based on that, we do meet with the regulators of the financial sector on a regular basis to align our educational strategies. I have mentioned earlier that we do have a recruitment process to recruit interns, either through Bank CETA or self-funded interns. I'm going to move on to the next page, which is the performance against the APP. In general, for all our targets from Q1 to 3, we have achieved most of them, exceeded some, and they were substantially achieved for the rest of them. I can just pass through the first one. That is the report on the proposed amendments of the regulations that I referred to earlier. We have submitted that report in Q3 to the DTIC. What that report does is it actually provides the regulator's view or review points on what regulations need to be prioritized in terms of supporting business development in South Africa. My apologies. We have achieved the number of education awareness activities through the period of Q1 to 3. Workshops conducted was, we've exceeded. We have at this moment in time, sorry about this. We are at the moment 97.49% on achievement through the target to register new registrants under the 6 or within 6 days, business days of receiving their payments. We are at this moment in time trying to recover from the incident that we reported in November, which I will touch on briefly towards the end of this presentation. Circulars, I mentioned already, we've already done 3 circulars for the year. We are at this point in time exceeded the 75% target for purchase orders to be allocated to MSMEs. Our diagnostic study report is the one that I referred to earlier that supports the business credit reporting environment. We are finalizing that with the IFC. We have been supported by the International Finance Corporation throughout the year. They have assisted the NCR with multiple projects in support function on consultation for services throughout the cooperation agreement that we have with the IFC under the World Bank. The feasibility study, I've already touched on what the purpose of that is. We have managed to do the roundtable discussions. As it was mentioned here, it was still underway, but it was completed in Q2, and we have then finalized the input and consolidated the input from the industry and provided that as a part, an annexure to the report to the Minister in Q3. The development of the educational strategy, we've already talked to that. We are now at this point to finalize the strategy and get it into the implementation. The strategy is aligned to the National Financial Inclusion Policy that is hosted by that the custodian is with the National Treasury. We haven't been able to achieve the Bank CETA appointments through the recruitment process. I'm hopeful that we can still, once the window open for Bank CETA, to employ those students. We have found that there were challenges with Bank CETA this year. The late opening of the applications was a problem, but we are still hopeful that we will be able to appoint those in Q4. On our enforcement program, this is program 2, we have exceeded our target for the quarters. We have exceeded that because we've done 465 investigations in total that was conducted on credit providers in relation to the NCA. We have received also a high number of complaints, which enabled, and sorry, we had also an efficient handling rate for that, which then supported more engagements throughout the enforcement teams. Enforcement action then was taken our report for enforcement action is only due at the end of Q4, and that is because most enforcements that we do undertake takes a period of time for that to pass through the courts, etc. Then on debt counsellors, we have also exceeded our target of investigations that was initiated. We exceeded it by 163. And that is also because you are aware that we do receive quite a high number of debt counselling complaints. And again, that was then facilitated the additional investigations that we performed. On enforcement action, again, that report for debt counsellors will also be provided to the committee through the finishing or completion of Q4. Investigations on credit bureaus, we've achieved our target. As you know, we only have 5 credit bureaus that are hosting credit bureaus. So we are focusing our enforcement and investigation efforts on those that are at highest risk. Therefore, we haven't had any enforcement action yet to be taken, but the report will be given to you in Q4. The impact on enforcements, again, there are 3 progress reports that we do once a quarter, and at the end of Q4, we do the final report on the number of impact and enforcements that we produced throughout the year. On program 3 is with a new program that we have in alignment with the sustainability efforts throughout the environment, social and governance sector of the NCR. We have produced a ESG strategy, which involved organizational awareness, and that strategy is now up for the review in Q4 so that we can finalize and approve that for implementation in the next financial year. We have, as I mentioned earlier, developed a funding model through the research project that we have done in the last financial year, in this financial year, sorry. It was the last financial year. We've started to implement it already in Q1, 2, and 3. Most of those relate to the fee increase that we've asked for. As you are aware that the NCR hasn't had fee increases for almost 11 years now, which means it is impacting on our sustainability financially so. And therefore, it's important that that consideration be taken at a high regard. We have asked for a fee increase, and the submission for that supports that increase has been submitted also in Q3. We have developed a culture framework. As I mentioned here, it is important that we plan to implement that in the next financial year. And most of those efforts that we've put in the framework that came from consultations with staff and management that are implemented, most of them would be without funding requirements, which is quite extraordinary, and I'm grateful for that. So on the stakeholder collaborations that we've done throughout the year, there were quite significant numbers here. But I just want to mention a few that are important. We have the financial inclusion strategy. I've already mentioned it a couple of times throughout this presentation. This is important because we have identified financial education as one of the highest contributors to the poor financial inclusion of the consumer. So we are very eager in participating with that working group and technical work stream with the National Treasury. We also participate under the FSR Act as a member of the FSOC, the Financial Stability Oversight Committee, and we do regular reporting to the governor here. So we sit on the highest level of oversight there together with the Reserve Bank and the FSCA and Prudential Authority, and FIC and other regulators. We also, as a part of our contribution to our external stakeholders outside South Africa, we do have several stakeholder and bank and benchmark visits from other countries. And throughout this quarters, we have hosted the Namibian Bank. We have also, we are also members of the compliance and enforcement committees, and we do participate there quarterly to share information and track the complaint trends and then plan enforcement activities together with the regional committees. We have international engagements with G20. We've attended the GPFI work stream, which is your Global Partners for Financial Inclusion. A lot of the focus this year was on MSME finance, the remittance and digital inclusion. We have developed throughout the year task teams as well as action plans to assist South Africa with getting ourselves on track with MSME support. And one of the things that's coming out clearly there is that the NCR, throughout our engagements, could support the South African environment better through establishing business credit reporting processes. At the moment, South Africa does not have a business credit reporting platform. We also had bilateral meetings with the Queen Maxima from the UNSGSA from Netherlands, and her delegation met with our team and the executive team in Q1 and throughout the G20 G20 engagements we had with her team. We have had the World Bank, IFC, CGAP, and the Gates Foundation in those meetings. That consideration and letters we got instructions or support through regulatory guidance, which they have thought alternative data, affordability testing, and digital lender inclusion should be the focus for the future few years. IFC program, we have mentioned that we are in the second phase already for our South African credit financial reporting inclusion projects. We have developed here the register for feasibility of the Section 69 registry that I've mentioned earlier. We have done the business process re-engineering report through the automation section. We are still busy with alternative data, but we have piloted successfully several alternative data projects already. We have also then established the benchmark through the funding model exercise I've explained earlier. We do attend the presidential working groups on invitation to assist with the business credit reporting implementation process. We are a member of the International Committee Credit Reporting, which is the reporting entity that creates standardized credit reporting standards for the global, for the world. So as South Africa regulator, we do participate and provide our input in standardizing credit reporting for the world and then for South Africa in specific. They have established an Africa regional consultative group, and as NCR is also a member of that. The next few, we do have, obviously throughout the 3 quarters, we have had several engagements. We also had a panel discussions with CISA. We participated in the Africa Credit Risk Reporting Conference. We have had another FSOC committee meeting. I'm going to move on to the next one. We have in this financial year also for the first time in NCR environment established a recognized union, the NAHAWU, and we have successfully concluded our first wage negotiation, albeit be very late in the year. We have then finalized that in October 2025. And through that, we have demonstrated the shared commitment to sound labor relations. We did our strategic planning session in October that would support this new APP that will be shared with the committee throughout the next few weeks. And then we did attend the 4th African Financial Summit in Morocco this year. It was hosted by the Kingdom of Morocco. And through that, we had key themes that included the building of trust among African states, Africa doing business with Africa, harmonizing regulations, financial sovereignty, and job creation. That is the main focus. They have highlighted the fact that everything we do should culminate or translate into job creation. South Africa, and especially the NCR's alternative data pilots, were there very highlighted in that summit. It was discussed quite widely as a potential solution for MSME data transparency. That just underscores the important work of the National Credit Regulator. I'm going to touch on the enforcement achievements that we've had for the quarters, the 3 quarters. We, as the NCR, we under the NCA have the following enforcement capabilities. We can make referrals to the NCT and the National Prosecution Authority. We can make do compliance notices, judgments of the courts and the NCT. We have settlement orders and imposition of administration fines. So this year we have done 17 settlement agreements so far for those registrants that were not complying to the Act. We had 8 judgments that were imposed with administrative fines. And unfortunately, our fines are very low. We can only fine up to a certain percentage that's allowed throughout the NCA. And those money or the funds that we do apply as administrative fines doesn't come to the NCR. It's actually paid directly into the revenue fund. We have 1 referral that was still made to the NCT, 10 compliance notices, and we have had the ability to pay 291,000 of the preceding financial year into the National Revenue Fund, and had 54 set downs at the NCT. Now, I think one thing I want to point out here is that for the first time for the NCR, sorry, I want to go back here, you'll note under section 140 of the NCR has the ability to refer matters to the NPA. And in the past, we haven't really had an opportunity to explore this much. So for the first time this year, we have referred 3 test cases to the NPA, and we are following that through to see what the pathway is for success through that enforcement. We had the judgments that we've made. I referred to them earlier, the ones that had fines imposed on them. I'm not going to go through them in detail, but just to mention that they were those that were found guilty of prohibited conduct, reckless credit, cost of credit, administrative fines were allocated. Complaints and evaluations, we were able to, through our monitoring procedures on compliance only, be able to make balance adjustments to consumers and made refunds to consumers to the value of 81.7 million so far. This is quite significant as well, because every effort or every complaint that's come through the NCR, we do follow through to those registrants to ensure that we do make amends for those consumers. Over and above this enforcement action, and I've got a very small enforcement team, I think the NCR can do so much more if I can have a double up size, or maybe even 3 times the size that we have. But then we have been able to at least do 12 raid operations during the 3 quarters. And we have, during that process, recovered numerous consumer instruments that were held by those credit, I won't say credit providers, because most of them were unregistered operators. Under our research and statistical report, we do, as the NCR, publish 2 reports, the CCMR, which is your credit market report, and your credit bureau monitor report. And that is allowed through our NCA sections 13 and 16, that we do research those prevailing market conditions, but also allow for us to recognize the emerging trends. So the data that we have at the moment is showing us that we had an increase in our quarter-on-quarter credit granted, and the number of credit agreements entered also increased. And the total outstanding consumer credit balances for that quarter end 30 of June was sitting at 2.44 trillion. More than half of that is represented by mortgages. And that shows an increase of 0.57% quarter on quarter and year on year 2.78%. And it's maybe important here to note that inflation does have an impact here if you consider that properties market prices have increased. It does not necessarily mean that this is the real growth in credit. It just merely means this is the balance increase in total. On the credit bureaus held records, we've had a report from the credit bureaus that they hold records to the numbers of 29 million credit active consumers in South Africa, and it increased. It was an increase of 1.818% when compared to the 28.9 million in the previous quarter. Consumers that were classified in good standing also increased by 213,000 to 18.7 million. This amounts 63.9% of the total number of credit active consumers. Those are then consumers that are in good standing. The number of credit active accounts increased also from 101 to 104 million, and the number of impaired accounts decreased from 20.68 million to 20.52 million, and the decrease equates to the total value of or percentage of impaired records sits at 19.71%. The financial report of the NCR at the moment, this is quarter 3 end. We have baseline totals at the top for our budgets that we prepared. We had a budget allocation of 176, which of up to quarter 3, we have budgeted 117 to be spent. We are slightly under for our budget spending, and that I can explain a bit later down. You'll see on the program, compensation of employees is the biggest contributor there too. And I've mentioned earlier that we were late in concluding the wage negotiations, which didn't allow us then to finalize the budget for payroll until that time, and where that resulted in many of our positions being placed on hold. On an administrative program, we have a variance of 31 million that includes your payroll and your goods and services as indicated below, as well as the purchase of capital expenditure. The compensation of employees, as I've already mentioned, that was amongst the contributors that were on the vacancy list. There is the IT manager that we were unable to recruit for the last 12 months. We had the CEO and DCO positions that were also vacant. On our goods and administration cost, we have premises that we vacated, and we were unable to settle. Well, we have settled, but we were unable to procure for the repairs and maintenance, and we were a bit late in doing that. We have also, during the November 25, experienced a cyber event at the NCR, and through that we had recovery costs to rebuild the system to be fine, and that still has to be finalized in quarter 4. I will give you a brief on the cyber incident if towards the end of this meeting. It is anticipated then that most of that expenditure will be paid from the savings in quarter 4. Education, we have the services for the impact assessment were also appointed only in quarter 3, and that work then commenced, which was then expected to be paid for in quarter 4. I want to mention here that you will see also from our transfer allocation, we were initially allocated 81 million, and in quarter 3, the DTIC has added 20 million to our allocation and it was ring-fenced to procure for ICT and to establish the environment. And that is as a result of our advocacy process through the development of the BPR, the business process re-engineering, to develop a operational management information system for the NCR that would be capable of servicing industry and consumers better and faster, but also to assist the NCR with enforcement through an improved compliance monitoring process. That system enhancement will cost the NCR, at that time, we've estimated approximately 60 million, including the infrastructure development as well as the development of the software and license agreements. Under that process, it can be staged in implementation and development. And for that, the DTIC has then afforded the NCR the 20 million to engage in a services of a procurement to allow us to start that process. However, we have been overtaken by the cyber event that occurred in Q3. But we are, and all our capacity resources and everyone that we have available at the NCR is working on recovering from that in event, which means that resources are very low to allocate to the procurement services that we usually have. However, we are doing our best to procure for that system. If the panel allows me, I've touched base, and throughout the report you'll see that I do make reference to the cyber event that has happened at the NCR. As a matter of transparency and to provide the committee with the detail, I can just confirm that on the night of the 19th of November 25, the NCR experienced a severe ransom attack. And that compromised and encrypted all our internal on-prem services. And that included the backup infrastructure. The NCR has a hybrid IT environment, and some of our services are not on-prem, they are hosted in the cloud environment. So it's important here to note that the cyber security incident only impacted the on-prem environment. The cloud-based services remained intact and was operational throughout. This includes mainly support functions that incorporated our communication services that were active and ongoing through the website, emails, virtual meetings, capabilities, the SharePoint data storage, and laptop backup facilities through the OneDrive capabilities. Other hosting environments that also were not impacted were the debt help system for debt review monitoring services. The attack was discovered on the morning after the 19th of November, and forensic investigation support was engaged by our cyber insurer. The digital forensic specialist that was engaged identified key aspects, and they identified that the attackers was the Dragon Force ransomware cartel, known for ransomware as a service group. Apart from that initial exploratory engagements through our external specialist negotiator, the NCR did not enter into negotiations regarding a ransom demand. The aim of that engagement was only to verify data exfiltration allegations. So with that, following that detection, we have activated our internal incident response and business continuity procedures. And we have, through that, established a structured recovery and oversight program that addresses the technical, operational, and governance aspects of that arose from this incident. So we have a very wide established workstream, different workstreams for every unit within the organization that were established within a period of 4 weeks. From the outset, we have had the approach then to ensure that we respond and recover activities and that they are all coordinated across the defined workstream allocation. We are also we had the approach to document everything accurately, that minutes are kept and the governance is intact for allowing us then to be able or capable of standing up to internal audits, external oversight, as well as external or regulatory scrutiny. And from a technical standpoint, I wish to just let the committee know that the NCR's ICT core infrastructure has now been stabilized and restored. And we are on an operational state through that infrastructure. That enabled the progressive restoration now that starts with business systems to be brought into play. So as the recovery has progressed, all emphasis have now shifted from basic system availability to improved resilience, security hardening, long-term control maturity, and of course we've learned lessons emerging from that investigation. Our core business system are now either fully operational or some of them are under controlled interim arrangements when necessary, pending the staged recovery process to full operations. We haven't we will not just bring in any of the production service environments into operation before it's been staged properly and that it's done in a proper governance process. Certain systems have been deliberately phased in, of course, to ensure that data integrity remains intact, validation and governance considerations are addressed fully before it's finally restored. The NCR has successfully maintained some of our core and support functions. For example, the CFO on the call has been able to maintain payroll services throughout the period, which is a marvelous achievement. Our other services have been restored or are being restored at the moment under strict staged recovery processes through business continuity management process. While the IT infrastructure rebuild was completed, the NCR is now awaiting the appointment of a service provider to perform a full penetration and vulnerability assessment on this infrastructure. And that is to assist us to identify remaining aspects of vulnerable components or any corrective measures that we need to bring in before starting to restore productive service back into this environment. So we have been, we also, of course, from a regulatory aspect, we have submitted notifications to the information regulator under section 22 of POPIA. We have opened up a case at the South African Police Services through, under the Cyber Crimes Act and the Prevention of Combat of Corrupt Services Act, PRECA. The NCR has then received also a lot of support throughout this process. And one of the highlights, or I can point out that the State Security Agency has been very supportive of the NCR. And already the NCR started with engagements with the Auditor General of South Africa to develop the audit strategy to accommodate alternative audit procedures around the incident. The audit engagements have commenced in February already. During the preceding financial year, I was just going to mention that while we are engaging with the Auditor General, there is still a lot of recovery to be done on the financial management system. So there could be, we are not yet sure, but there could be potential timeline inconsistencies that we need to accommodate throughout this process of bringing back the server into production. I'm going to pause there for a minute. I want to mention lastly that apart from the cyber event that the NCR experienced in Q3, the NCR identified an unrelated data protection incident on the Debt Help system. And that arose from a configuration issue that resulted in unintended public accessibility of certain data. Again, the Debt Help system, as I explained earlier, is designed to track the progress of consumers that enters the debt review process under the NCA. While that is also assisting then the NCR to monitor our work on debt counselors who is assisting these consumers throughout their process of debt review. The services of the Debt Help system is hosted in a cloud environment. It's not part of the on-prem service environment, and it was not part of the cyber attack. But to this end, the NCR management has taken a decision at the time of this incident to take the system offline. It was taken offline in the early parts of February so that we are allowed to perform forensic investigation and penetration testing. We expect the reports from this to come to conclusion within the next week. And thereafter, remedial work will start to define and implement what is the recommendations from that report. Well, in the interim, we are not sitting doing nothing. The NCR has then engaged industry and agreed to work closely with them to implement a solution for consumers under debt review to exit once clearance is gained from paid-up credit providers. Now, this part of the debt help process is quite important because it allows those consumers that have paid up and gone through the journey and have themselves rehabilitated to enter back into the credits environment and start to establishing their positive credit records. So they have to exit the system effectively and be unflagged at the credit bureaus for this to happen. But from our historic evidence, we are wanting to just point out that the number of consumers that usually exit successfully is very low. However, we do treat each consumer with the highest respect and consider everyone as a priority. This intervention that we have designed will come to part in this week, and it will be implemented probably by the earliest on Monday next week. We are waiting just for the finalization of the approval documents. I'm going to pause here. I think I said quite a bit. So I'm just going to stop sharing and then close my presentation. Thank you very much. And thank you, Chair.
Thank you very much. Colleagues, we have received the two presentations. We can now ready to get to engage.
Chair, we have the hands of Mr. Mdluli, Ms. Mosikatsi so far, Chair.
Okay, those two.
Mr. Gama and Mr. Charles.
Okay.
Thank you, Chair. So I'll just go ahead. So I have questions directed to the NCC, Chair. I have about 5 questions, so I'll just ask them. The first question is, the NCC failed to meet its target of finalizing 70% of complaints in priority areas, with performance declining from 61% in Q1 to 32% in Q3. So my question is, what are the specific operational or management failures that led to the sharp decline in complaints finalization from 61% to 32% over 3 quarters? And what immediate corrective actions are being implemented to prevent a growing backlog that undermines consumer confidence? The second question is, the NCC reports overspending of 7.5 million rands on goods and services by 31 December 2025, while citing eroded baselines and reliance on retained surpluses. My question, therefore, Chair, is why is the
Can I just interrupt quickly? Chair, could you maybe just switch off your mic, please? Somebody's mic is on.
It's Ms. Mosikatsi. Okay, thanks. My question, therefore, Chair, is why is the Commission structurally overspending on goods and services while simultaneously citing budget constraints and cash flow risks? And what reforms are being introduced to the third question of the NCC is that the NCC has a 17% vacancy rate with 80 unfunded posts on the structure, while also acknowledging human resource constraints as a key risk. My question, therefore, is how does the Commission justify maintaining 80 unfunded posts on its structure while critical performance indicators such as complaints finalization are deteriorating and has a costed organizational review being conducted to align structure with available funding. The fourth question, Chair, is both accredited ombuds, which is the Consumer Goods and Services
Chair.
Ombud and the Motor Industry Ombudsman of
Chair.
South Africa, reports high levels of supplier. Can I proceed?
Honorable Nduli, I can't see who's talking.
Apologies, Chair, but Honorable Mjoli, I think it's the network issues. I'm not sure if it's me, but I think he keeps on. I keep on losing him.
Okay, if you can be in a stable corner, Honorable Nduli. Colleagues, please let's switch off those who are in places that are busy. Okay, thank you. You can proceed.
I think it should be better now. So the fourth question, Chair, is both accredited ombuds, which is the Consumer Goods Council and Services Ombud, and the Motor Industry Ombudsman of South Africa reports high levels of supplier non-cooperation with matters escalated to the NCC. My question, therefore, is what enforcement consequences are being imposed on repeat non-cooperative suppliers? And does the Commission believe the current legislative framework under the Consumer Protection Act is strong enough to deter systemic non-compliance? My last question, directed to the NCC, is the NCC presents the opt-out registry as both a consumer protection mechanism and a review opportunity. How will the Commission ensure that the opt-out registry prioritizes consumer protection rather than becoming a revenue-driven compliance exercise? And what safeguards are in place to prevent weak enforcement once the system becomes operational in September 2026? Thank you, Chair.
Number 2.
Is it me, Chair?
Yes, ma'am.
Thank you, Chairperson, and good morning to the honorable members, the Deputy Minister, and all on the platform. Let me also start by welcoming the presentations, both presentations from NCC and from NCR. My question to NCC is based on the highlights in terms of achievements of targets. My question would be, they have been achieving most of the targets, but then some of the targets has not been achieved. My question would be, is there any mechanism in place to address those targets that has not been achieved by the NCC? And also, as the former speaker said, the issue of the fiscal constraints. Is there any plan in place to address it? To the NCR, in their presentation, they indicate that their fines are very low. And when those companies pay fines, they are not paying to them, they are paying direct to the revenue fund. So I just want to check with them, is there any legal or any policy that is actually not allowing them to raise the funds that they are actually asking when they speak to companies that are not compliant? And if so, what can be done to resolve the issue? The other issue, they also highlighted the issue of vacant positions, which I think if those positions are filled, they will be able to assist in doing the work so that they can be able to achieve their targets. But then I think those positions are very critical, and it's important that they must fill it. And based on the presentation that at least the settlement agreement was reached in October. So it means there is an opportunity for them to actually fill those posts. Thank you, Chairperson.
Thank you very much. Number 3, Mbakama.
Thank you very much, Chair. Good morning, honorable members. Good morning to the Honorable Deputy Minister, the members of the National Consumer Commission, as well as the National Credit Regulator. most of my other questions have been covered by Member Mdluli, so I'm not going to repeat them. But to the National Consumer Commission, I would just like to get a sense of what is the progress that has been made in recalling harmful sanitary products, which include pads and panty liners, which have been found by the University of the Free State microbiology department to contain harmful hormone disrupting chemicals, but they're being passed as being sold as free from harmful agents. The study revealed that there was a long-term that if there was a long-term exposure to these products, people would get hormonal imbalances, there would be reproductive concerns as well as certain cancers, among other long-term effects. I just want to get a sense of how far is the NCC in terms of recalling from all retail shelves these types of products, and what process is going to ensue to make sure that in future they manufacture products that are really free from harmful agents. Thank you very much.
Thank you very much. Are there any further hands?
Yes, I've got my hand up, Chair. Mr. Chance
Yes,
here.
Member Chance.
Thank you very much.
And Mr. Gama, Chair.
No, he just spoke now. Is it Langa or Gama?
Okay,
Yes,
I'm going to proceed. Thank you very much to the Deputy Minister and to the two presentations we've received. My first question is to the National Consumer Commission on the motor industry ombud. I've become aware of a problem with some consumers who are paying installments for months on defective or unroadworthy vehicles while waiting for the National Consumer Tribunal or the motor industry ombud to resolve a problem. And this seems to have been going on for a long time, which is resulting in consumers, having to fork out money whilst the problems are not being resolved. So I just wanted to get your input on whether that is being addressed in some way. And then again, on the issue of the illicit goods and unsafe products, it seems that this is becoming a growing problem. And we were made aware of it tragically when we saw the children being poisoned by goods in the spaza shops. I just wanted to find out what is the Consumer Commission's activity regarding that program to inspect, obviously with the NCRS, the spaza shops and other retail outlets to make sure that those goods are not still on the shelves. Then on the National Credit Regulator, I have quite a few questions. The first thing relates to the issue of fees, which are payable to the payment distribution agencies and the debt counselor fees. Now, if you recall, Mr. De Beer, we did have a presentation from the payment distribution agencies over a year ago, where they were saying that the fees for this service have not gone up in many, many years. And this is putting a significant strain on these organizations. And the same can be applied to the Credit Association of South Africa in regard to the debt counseling fees. And I recently received some statistics which are quite startling, because according to the Credit Association of South Africa, there could be an additional estimated 3.1 million additional approvals per year, stimulating up to 357 billion rand of credit into the domestic market, both for individuals and businesses. And it seems to me that if this is the case, we're missing out on a huge opportunity here to unlock credit. And as we all know, the lack of financing in this country is a major issue, which is being addressed in various ways. But it seems that this is something which has been overlooked. I'd just like to get input from the NCR as well as the Deputy Minister on this particular point. There was another issue that was drawn to my attention, which is the proposal from Treasury for the consolidation of loans for government employees, which has the potential to exacerbate debt distress for those government employees. I wanted to just get the input from the credit regulator on that, and again, whether the Deputy Minister is aware of any discussions with the Treasury on this matter. It was revealed by a prominent consumer journalist last year, and organizations representing this industry have come back to me and asked, what is happening with that, because it could, again, put a huge strain on members of that industry. I also received quite a few messages regarding the non-functioning of the debt help system. And I'm very grateful to the CEO, the acting CEO, for being so transparent about the hack and explaining what has been going on and what attempts have been made to the hack, not to the debt help system as you explained, but to that system as well as the other systems that have been affected. And then I have another question, which is probably aimed at the Deputy Minister regarding the withdrawal of the National Credit Amendment Act in September last year. And if members will recall, when the Minister gazetted the amendments, there was an outcry because of the supposed inclusion of credit information of students. And as a result of this outcry, the amendment bill was withdrawn, although that was a completely bogus set of complaints, because actually in the original act, those provisions are included anyway. But there was a huge backlash from the banks, Deputy Minister, because of the purpose of this amendment was to extend greater credit opportunities for SMEs who had been excluded from the credit market because of the onerous requirements for providing information on their credit records. And what this Amendment Act was designed to do was to unlock credit, similarly to what I was referring to earlier in relation to fees. And I wanted to just know, what is the status of the reintroduction of those amendments, and what re-amendments, if I can call it that, are proposed so that that amendment act can be tabled as soon as possible. Thank you very much. That's all for now.
Yeah, good.
There's no further hands, Chair.
No, thank you very much. Apologies for that. I also wanted to check with the NCC. I note the penalty that has been paid and the number of complaints from We Buy Cars. Looking at the business model and how this particular company has come into being, have you not? Because I thought I would hear the recommendation whether we need some market inquiry with regard to their conduct, or any other thing that must be done, because a number of people are complaining. People are buying cars that are not working, and there has not been any recourse. Secondly, where do the people who've got issues go and complain? So that at least we probably advise the department or the entity to do some public awareness campaign for those that are falling victims of this particular dealership, if you like, and what is its impact in the market generally, given the fact that they've become like so big compared to other small corner companies that are selling the cars. The other issue that I wanted to check on is on the cyber, to welcome that at least we have been given information, but to raise the concern that it appears exactly like that which happened at the SABS, whether or not the investigation will go deeper to understand why these sorts of institutions are targeted by these hackers. And we'll be given a full information, including how we can protect information from these hackers, especially on at the level of the NCR. Let's allow the team to come through, and then we'll take the issues from there. Over to you.
Chair, there's Mr. Kosa has raised his hand, Chair.
Yes, Honorable Kosa.
No, thanks, Chair. For the sake of progress, I suggest perhaps they can respond. We'll just come after we follow up. I think because the Chair just sum it up, we'll just get the responses and then we'll come after the correspondence or interaction from the entities. Thank you very much, Chair.
Okay, over to you, DM and the team.
Thanks, Honorable Chairperson. Mr. Rachisusu will start and then followed by Ms. Dibia, then I will come in after.
Thank you, Chair and honorable members, and thank you, Deputy Minister. I do have on the call the CFO of the NCC as well as the head of complaints and investigation. So I would ask them to chip in, if you permit, DM, and also the CEO of MIOSA. She's on the call, but I'll give it my first shot, and then where they need to add, they will add. Just on the first set of questions, so on the performance in relation to the number of complaints completed, you will see that the significant period of the decline was in the third quarter, which has December as a very slow month. As companies close, we are not able to investigate some of the things, but also our approach to some of these investigations, you can see the numbers keep increasing. We finalized 808 in quarter one, 796 in quarter two, and 457 in quarter three. So what we are doing, we now have a strategy. So we have these complaints that implicate a number, one big supplier. So we've been engaging with the suppliers. Our first option being to settle those matters, and those that settle, we resolve so that the consumers get redress as soon as possible and speedily. So we have a plan to catch up this quarter. I have the head of complaints and investigation. If she can, update the committee on that. The issue of the budget and overspending, and I did raise this, that you'll see that the baseline has been declining and our legal costs have been increasing. So the main expenditure is coming from legal costs. And the challenge here is that we have cases that are running. We have to fund those cases. We have to defend our wins before the tribunal. But also we have to appeal those matters that we think do not or require the consideration of another court. So that is where you see the spending. But we have raised this with the DTIC, and it's hopefully it will be attended to. The reason we have the staff profile, we say we have 80 unfunded positions. As you know, there is an establishment for the entity. of, I think it's about, is it 150 or thereabout employees. So that is an approved structure, but the budget doesn't match that. So we will always reflect that as positions that are there and those that where there would have been additional budget, we can then easily grow and expand the organization. So we had a consideration of whether to review the structure, to align it to the current allocation, but in our view, the current allocation is not adequate to deal with the kinds of problems that we are seeing. So I think that would be us really confirming to constrain the entity, which is not what we would like to see. The consequences, and that it's important, I think, Honorable Ndluli, you're asking this question around the CGSO and MIOSA and companies that do not cooperate. So we have companies that would dispute this, and they go all the way to the Supreme Court here. And we prioritize, and we've been doing this, prioritize those matters where the Ombud would rule for the consumer and the supplier is refusing to honor that ruling. Those are matters that we take forward, as a priority. You will see that we have settled, say, 31 cases against We Buy Cars, but there's a whole lot more cases, that are before the Ombud that if they are not attended to, then we would still have to intervene as the entity. The opt-out register is a very important intervention to protect consumers against unwanted calls, unwanted marketing. But on its own, to be effectively implemented, it has to be sustainable. We only talk about it, being a revenue generating stream in the sense that we will be able to generate revenue, to reinvest in the system, to add more resources to support that system. So we are not doing it for the money. This is a regulation meant to protect consumers against unwanted marketing in the country. So I think in terms of the achievements, we have put in place and measures in this period to catch up on those targets. Of course, our ideal is to meet all our targets, but you can see that our performance is hovering, just over 80%, and the kinds of cases we are resolving in the process. So in some cases, though there are targets, if a case is not ripe for resolution, we will not resolve it because we want to meet a target. Otherwise, we'll be doing a disservice to the consumer. So we have to find appropriate and optimal and appropriate a resolution and outcome that fully addresses the issue. But we do have a plan in place, and we're quite confident that at the end of the financial year, we'll still be performing at a very high level as the NCC. The plan to address the fiscal constraints, maybe I'll leave this to the DM because he might have the latest update on this. So I'll skip this. And the progress on the sanitary pads issue, we have, I think, Honorable Gama, you are raising this. So we have we have launched an investigation as the National Consumer Commission. We did so immediately. We got this information. We engaged the university and academics to understand their point of view, and our approach to this matter, having had the academics, was to initiate an investigation, because as the regulator, we also have to obtain independently our information to assess this issue, to then reach a conclusion on whether there is a contravention or not of the Consumer Protection Act. We are also engaging with other regulators in our space. The National Regulator for Compulsory Specifications, South African Bureau of Standards, and the National Metrology Institute of South Africa, because we would like, before we can take any steps, including a possibility of a recall, we need to be satisfied that that is the appropriate step to take. But at this point, we are at the phase of investigation. It's a high priority investigation. We will provide the companies affected. We identified already 9 companies that are under investigation that supply, your major products, of these sanitary pads. So the investigation is ongoing. We have that, and then we'll update the committee as and when appropriate as that investigation proceeds. And then we have the and I think we have this challenge about the time some of the cases take. You have seen, I've been trying to demonstrate the impact that the ombuds are having in the system. So the alternative dispute resolution mechanism, which is allowing us quick redress to consumers so that consumers can get their, it's a refund or whatever needs to be attended to quite quickly. Now, we have matters where the suppliers are disputing either the finding of MIOSA. We investigate the dispute that we have to prosecute, and that process unfortunately takes longer. There's a ruling now recently that also suggests that we should also be bringing the banks into the mix, because the banks also have some responsibility to ensure that they fund vehicles that do not have defects, essentially. But this is a recent judgment. We are looking at that judgment. We will be engaging the banks to see what is it that can be done to ensure that consumers, so the consumers are not the ones taking, bearing the brunt of these kinds of injustices. With respect to unsafe products, in this current APP, you'll see that in the previous period, we would have inspections. So we had inspections, but we agreed with the department that those will put in the operational plan. So inspections are continuing with all our partners in the space. So all the sector regulators we work with. So that is continuing. But I do have the head of complaints and investigation who can add, because they are always on the ground. So this is happening, and I think you can see that we are making progress as regulators. We are issuing compliance notices to these spaza shops. We are also proposing even tighter regulatory measures for track and trace to help formalize the sector as we can. And finally, the chair, on We Buy Cars, this is a very important question, and we hope that the settlement that we have, which is made in order, will help address this issue. Because number one, We Buy Cars have agreed to amend their terms and conditions. So all sales that should be happening from this year, we don't expect there to be issues around, particularly the honoring of the 6-month implied warranty and disclosure of any defects on a car, because failure to do so exploits the consumer. So the consumer overpays for something that has got defects. So that's a challenge. So we have that commitment. We have a commitment that they will fund an awareness program for this, because there's no such, food stewards agreement. These are things of the past. It doesn't work. So consumers must know that food stewards would mean that they know that they're agreeing to something that is there. They can see. They're happy that a car doesn't have a mirror, doesn't have this. So if they're happy with that, they buy the car, but that should influence the price. But our expectation is that the company will respect the order, because this is a court order. And if that does not happen, it doesn't stop us from looking at these matters again. So if there are new matters, we're going to look at those. The Ombud is looking at some of the matters. They gave us a commitment, a firm commitment, that they will cooperate with the Ombud on these outstanding matters. But Chair, just to note that it's not only We Buy Cars. There are many other smaller second-hand dealers, car dealers, who are some even doing wasting. So we are looking into this place. We have zoned into this space. There will be prosecutions of those that do not want to comply with the CPA. But with this settlement, we are hoping that we will see a different We Buy Cars going forward. And if that does not happen, Chair, we are still available, we're still here, and the law is still here. We will continue applying the law. I don't know if CFO or Prudence, you want to add anything briefly, if I've missed anything.
No, Commissioner, you've covered. Good morning, honorable members. Good morning, honorable Chair. Just on the issue of illicit goods, as Commissioner indicated, our inspectors have a plan. We have a plan for our inspectors to touch each and every province. But as and when there is an incident, we then have working relationships with environmental health practitioners on the ground. Fortunately, the last 2 reported cases of possible alleged poisoning, because we were also working with the police, it actually was discovered that, especially the last one in the Eastern Cape, which is the most recent, it was discovered that foul play is involved. So that matter is with the police. It's not necessarily the issue of poisoning in terms of the product. So early warning system, as and when we get a reported deaths, as well as the planned inspections throughout the country, where we work with environmental health practitioners to ensure that we cover the areas progressively every year to ensure compliance with the provisions of the Consumer Protection Act. Just briefly on the sanitary towels issue, we met with the University of the Free State on Monday, and we went through the report. I think part of what we observed, and it's part of why we took a decision to go the route of an investigation instead of product recall, was that further probing still needs to happen. And as Commissioner has indicated, we are working with other regulators with testing capabilities to review the report, as well as assist us with further testing. So we will broadly cover the menstrual products to ensure that consumers are safe, and we will, as Commissioner indicated, we will come back to report. Briefly on the issue of complaints, the strategy in the main in terms of complaints that we have. So these are complaints that would have failed at mediation, which means the complexity is now higher. So we would then batch these complaints and then also conduct tracing, as well as ensuring that we do an in-depth investigation on them. And I think the issue is just the complexity, as well as the fact that these are suppliers who are not in the main willing to give consumers what they want. So we then follow up with rigorous investigations, the batching of the complaints. And I think in the third quarter, what contributed is that we also had an increase in the complaints against the operators, the cell phone sector, wherein we have now found a solution through our engagements with them in various investigations, wherein most of those complaints are resolved in this current quarter. Thank you.
Thanks, Prudence. Tebuko, did we cover everything on the finance? Are you okay?
Okay, thank you, Commissioner. Morning, Chairperson and members of the Portfolio Committee and other colleagues. In terms of the budget pressures, as indicated that we have budget pressures, especially on goods and services. Our total budget is 73 million and 50 million is utilized on employee costs or payroll. And plus 20 million is for goods and services. On the goods and services, on our key spending is on IT-related goods and services. You'll understand that we did indicate that we have opt-out registry. Therefore, this system requires some budget so that we can take it live and make sure that it's sustainable also. And on legal costs, this is an area that I'll say is uncontrollable, because as NCC, we need to go and defend ourselves in high court. And the costs that we incur there, most of the time they exceed the planned budget. And we also have the traveling cost. On the traveling cost, there we have our investigators. They need to go all over the country to represent us on consumer-related issues. And this is based on the needs, based on the investigations that they need to attend to. Therefore, our budget there most of the time exceed the actual. And we also have the education and awareness, which is also an important area in NCC that require also the traveling cost. And we also have the office accommodation. And these are key areas that these costs are unavoidable from our operations. Therefore, we are sitting at a deficit. However, we are able to pay our suppliers as when the services are due. And another plan that we have, this opt-out registry that we are implementing, we are expecting that it will generate a revenue for us in the future, in the next financial year. And there's continuous engagement with the department so that they can assist us with these budget pressures. And also for payroll or for employee costs, those unfunded positions, the reason they're sitting there, we still have the budget issues so that we can fill those positions. Once we have a budget, we will be able to close all the gaps. Thank you.
But thank you, CFO. No, DM, I do have this, Queen and Leanne from the CGSO and Miosa. I don't know whether they would like to add anything. And that would be it, our side.
Good morning, Honorable Chair and members. I am Leanne from the Motor Industry Ombudsman. I'd just like to answer the one question regarding monthly installments with regards to complaints that we receive in our office. When lodging a complaint with Miosa, this does not suspend a consumer's contractual obligations with regards to payments. While Miosa investigates the dispute under the CPA and the code, any finance or payment agreement remains legally binding. Consumers are therefore required to continue paying their monthly installments to avoid breach of contract, repossession, additional charges, or adverse credit listings under the Credit Act. However, we are in line when it comes to finalizing our complaints. We are in line with our code, but obviously we are always looking to speed up the process. So this year, this new financial year, we're prioritizing the modernization of our complaints management system, where we'll be incorporating a lot more automation and AI-driven analytics to improve our turnaround time, so the complaints are resolved faster. And in addition to these new systems, YOSA will be strengthening its workforce in this next financial year, bringing in more case managers and administrative staff, which will also then improve the turnaround time. So we are trying to find ways to have the cases in our office, the investigations go quicker, so that there aren't too many delays and the consumer doesn't. We have a lot of consumers stopping payment, and they can't, unfortunately. They have to continue because they have a contractual agreement with the financier. So we're trying to get the complaints out and resolved as soon as possible, and we're putting new steps in place to make it easier and quicker.
Thank you. Thanks, Leanne. And Queen, do you have anything your side to add?
Yes, thank you so much for the opportunity. Thank you, Chair. I just want to respond to add to what Commissioner has already said regarding the non-cooperative participants or suppliers on what is being done about them. So I just want to clarify first that we have two types of non-compliance. One being what the Commissioner spoke about, which are the suppliers that are ignoring the recommendations from the Ombud. Those are the ones that we would then close the case and escalate to the Commission for further investigations. Then we also have a percentage of those suppliers that are ignoring the code. Although we have a mandatory code which requires all suppliers in South Africa to sign up and also cooperate with, but for mediation to succeed, we do need two parties to participate in the process. We need a complainant and the supplier. So those that are not subscribed or not signed up with the Ombud, the challenge is that we struggle to find them. So therefore, complainants will not get redress, although the code requires us to deal with all complaints, whether suppliers are signed up or not. It's difficult to find those that are not signed up, and they are not traceable. So the recommendation for tracing system will also be implemented in assistance, or which will assist us to find those that are not being able to be traced. And also in the beginning, since inception, we've been using the carrot approach, a consultative, educational, as some of the suppliers claim that they do not know about the code and they don't know about the CGSO or the Ombuds. So we educate them first and trying to get them on board. So we are now planning to move forward to the stick approach, wherein the code does allow us to take those suppliers, those that are not cooperative, to court. So those are the other steps that we're taking in making sure that consumers get their redress, which is due. Thank you, Chair.
Thank you very much, Queen. DM, and that's our reply.
Thank you. We will go to the NCR CEO.
Thank you very much, DM, and also through you, Chair. If you do not mind me not sharing my screen, that will just compromise the data streaming ability for the audio. But I will start with the answering of questions with Honorable Musikotsi. I will answer your question where you have indicated whether there is any policies or restrictions that does not allow the funds to be raised in terms of the administrative fines and penalties. And yes, we do have the NCA section 151, my apologies, that prescribes the way and manner of how we calculate those fines and administrative fines. So through the changes in the legislation, I'm sure that that can be amended, but that is the restriction that we work under. For us, I think at this moment in time, we have made a proposal for the funds to be transferred to the NCR instead of to the revenue fund. That is a lengthy procedure which the CFO of the DTIC is committed to assist the NCR with. So that is work in progress, and we will follow through with outcomes of that, and if necessary or if possible that it's successful, we will report back to the committee. Honourable Chance, you have a few questions that I will attempt to answer one by one. You have asked through the committee chair if the NCR has had a view of the fees from the PDAs and the debt counsellors, in particularly opening up a market of 3.1 million additional approvals through the debt counselling process. What we have done as the NCR, and you probably know that we have under the National Credit Act Regulation 45, the requirement for the NCR to perform a periodic review of limitation on fees and interest rates at intervals no more than 3 years apart. And through that review, we then have to advise the Minister of the impact that those limitations on fees have on the industry. That increase in cost of credit may be inevitable this time around from the research that we conducted by the NCR. We have submitted this research in Q3 to the Minister and the DTIC, understanding that that minimum or maximum cost fee under Regulation 42 specifically has not been amended for more than 10 years now. That is important. I do acknowledge that that is a critical part of the regulatory review process. However, the PDAs are not included in that review per se, but we have, as part of our submission to amend the regulations, proposed an amendment for the PDAs as well. We further considered that an increase of that cost of credit will allow for some of the registered credit providers operating in towns and rural areas to be able to expand their business risk models. Because at the moment when it becomes unaffordable due to the high default rate, most of those business credit providers reduce their, or I would say exceed or increase, that's the right word, increase their risk profile to accommodate their own business entity risk. In other words, when the default rates get too high, they have to higher the access rate to get into credit. So that is, of course, then have a resulted effect of exclusion of consumers. And we would like to counter that or avoid that at all cost. And by doing so, we need to assist the credit providers specifically and the PDAs to increase their cost that are limited by the NCA. So if they have a higher rate that they can charge, it will assist for them to absorb some of the default rates that may imminently come through a higher risk profile consumer. So through that risk or through that research project that we've done and submitted, we have considered 6 regulations on 6 sections, I think, of the regulations, under which the regulation 33 is your credit life insurance, your short-term credit transactions, your interest rate and initiation fees, service fees, additional fees, And then, of course, the payment distribution agent fees we have added to that submission. So in all honesty, this is Q3, so there wasn't much time for the DTIC review that, and I would just ask maybe for patience, the submission from the NCR be considered. But we are aware of that. We are trying our best, and we have consulted widely with industry, and we're trying to accommodate that process through the review of the regulations. On your question to Honourable Chance, and at this point in time, I'm not sure what the consolidation of loans matter refers to. So if you are able to allow me, we can respond to you in writing so that I can refer the matter back to the enforcement and complaints team to see whether there is any particular action underway. On your third question, I take note of your granting of the transparency from the NCR as a potential relief of that question and answer. So I would also just want to point out that this was disclosed to Parliament under portfolio or parliamentary question 7305 on the early days of December. That is in relation to the cyber attack as well as the DHS incident that I referred to earlier in my presentation. On your question for Honourable Chance on the regulatory withdrawal by the Minister and the backlash that we got from the banks, I think I want to just allow the committee to understand the whole ecosystem again. Again, from where we sit as the NCR, we do see the whole picture. We do not just talk on behalf or from one sector of the industry. The regulated credit under the NCA is vital. You know that it's vital, especially for MSMEs and economic growth. But we need to balance the access to finance with consumer and system protection. But that say, while credit bureaus are helpful, they also assist then to plug the information gaps for MSMEs specifically. And we are, on the other side, have to promote responsible lending on the credit provider side. So MSMEs have often remained invisible to traditional lenders purely for various reasons, not just for credit information, but credit information is one part of the solution. We haven't established in South Africa a MSME or a business credit reporting platform. That is in progress now, but that will assist with having the limited formal records of an MSME to be expanded upon. I've mentioned earlier the initiatives we've used on the pilot projects we have with alternative data, etc. That will assist then credit profile clients to become more visible to the credit provider portfolio. That also said, we have the business credit information project that expands business credit reporting, but we should also look on the other side. The second part thereof is to support the credit providers and specifically micro and bigger business banks with a cost structure that is affordable for them to support the MSMEs with lowering their risk profile and giving more of them access into the market. For that, we have so banks play a bigger part in when the smaller business have migrated or promoting to a higher risk profile, whereas microcredit providers are usually the early stage informal business support function. So all of them play a very important role, and they are complementary in the credit ecosystem. You cannot dispatch one from the other. So how I dated, I've just mentioned earlier, the credit or the interest rates and the fees, very important for us to update. We have already done that work. We are busy doing more of that and follow through with finalization. So we are wanting to reduce the exclusion by looking at both sides of the coin. And then, of course, the third leg that's also very important here is to look at the sustainability of the regulator in how are we going to be able to take on more consumers. If we are bringing in MSMEs into the credit reporting platform, you are also increasing the expansion of the NCR's consumer protection. So we do not have the resources at the moment in time to do that. So this is critical then also to look at that part of the component. So what we have done is, as the NCR, we have then on our APP, you will see that there is a section under the program 1 where we have proposed that we plan to create an enabling environment for businesses through that instruments that we talked about earlier, by then proposing the regulations under the NCA to the minister. And subsequently, we have then held a meeting, and in October, we have made a request to the DG to establish a joint committee with the DTIC. The purpose of that is to ensure a coherent, aligned, and of course efficient process to re-establish or resubmit amendments to the regulations. The committee's work then will consider the priorities, of course. Under that priority we will discuss with the business partnership under the presidency. We should also be cognizant of the separation of functions. We will make sure that the NCR remain independent in this process as we engage the DTIC. So the committee will be responsible then to propose and draft amendments on the same. The aim is here for us, as the NCR, we've already drafted our first submission. The terms of reference for the committee was approved in late last year. We have submitted our draft proposal to the regulations then very late on December, while everyone was on holiday on the 29th of December. So this is where we are, Honourable Chance. I'm very positive that you will see very good results coming from this. On the last question from Honourable Masina on cyber concerns, for sure, I think if you look at the deep delve and investigations that will be done by the cybercrime unit from the SAPS, you will find reports coming or emanating from that will give you the reasons you've asked why these type of entities are being targeted. But just to add to that, I want to say South Africa businesses are hit quite a lot, and I've read an article that stated more than 2,000 times a week. So South Africa is a fast-growing data breach epidemic. I wouldn't call it like that, but it's the second most affected country in Africa. And it's increasing purely because South Africa is also an advanced leader in digital aspects, which makes us a high priority target, of course, for cyber attacks, because we have now expanded our broad digital platform usage, and that includes cell phones use. So South Africa is one of the high users of smartphones in the world. So we have a high usage of digital platforms, which makes us then, of course, a broadening our attack platform surface. So that is it's not a NCR or SABS related matter. It is a South African, broader African problem. I just wanted to point that out, but thank you very much to the committee. I'm going to just give opportunity for my executives just to add to the question and answers. As far as I could see, there wasn't any financial questions. Can I just ask by raise of hands, maybe from my team, if there's any submissions I've overlooked? First, let's hear from the CFO, Ms. Mweli.
Thank you, CEO. I think you've covered all the areas that were relating to the question raised in this meeting. Thank you. No further input from my side.
Company Secretary, Mr. Mabeba.
Thank you very much, CEO. And I am of the opinion that you have comprehensively covered all the queries that were put on the table. I have no further additions. Thank you very much.
COO, Ms. Balogo.
Thank you, CE. I also took into account your comprehensive report. There's nothing from my side. I'm covered. Thank you.
Thank you, my team. Thank you also for supporting me. I will then hand over to you, Deputy Minister Kotlimpi. Thank you very much.
Thank you very much to the team, and I think if there's anything that needs to be restated, I will state it, Honorable Chair, on your guidance. But I think the team gave what is a comprehensive set of replies, except to just add on the point that Honorable Chance had raised with respect to the NCR, the regulations. You are correct, Honorable Chance. That was a communication problem. So the bulk of the reaction was based on a misunderstanding of the original act, the original regulations, and what the Gazette sought to do. So that process of correcting exactly what should have gone to the Gazette and what are the implications of it is underway. The minister has already started that process. Pretty soon we should be finalizing the publication of a new Gazette that is better framed to avoid a similar mass hysteria problem as we saw before, as a function of misunderstanding what exactly is contained therein. That was going to be done either way. So the withdrawal was not the withdrawal of the regulations because there was anything specifically wrong with the regulation. The withdrawal was because of the misunderstanding of what the regulations sought to do. So that is being corrected and it will be published again. Thank you.
Thank you very much. Are there any further questions from members? I know Member Khoza, you had allowed us to proceed after I had asked questions. Is there anything perhaps you want to add, Member Chance?
Thank you very much, Chair. And I want to again thank the officials for your comprehensive response. And Mr. Beer, this research report that you submitted in Q3, would it be possible to share this report with the committee members? Deputy Minister, you probably have a say on this matter. I think it's highly pertinent because the issues that are raised are extremely important for the unlocking of credit in the economy. I just want to point out that the regulated credit providers are looking for an increase in fees and interest rates to be able to be charged, not to usurious rates, but to levels which makes it possible for them to lend money. We're not talking about the 100% or 50% per month that the unregulated credit providers are providing, the so-called machinistas, and these are the people that are causing massive distress in millions of households in South Africa. So I do stress the importance of this and request the department and the ministry to bring these amendments forward as quickly as possible. And then, Deputy Minister, I accept the fact that there was a misunderstanding, but was it really necessary to withdraw the Gazette? Couldn't you just have done some better communication? And, you know, if it's really just a matter of communicating, what is stopping you from communicating and reissuing those gazetted amendments?
I see there's another hand. Andre, I can't see you.
Yeah, I don't see any hand, Chair.
Okay. DM?
Thanks, Chair. Honorable Chance, as I'm saying, that process is being done. The minister thought it best at the time to withdraw the Gazette, so he will have to do another Gazette process. So that's already a process in motion on how a Gazette is done. Whether it should have been spun differently, then you and I can debate the whole day what was the best course of action to be done then. And the point is, we are now at a point where the Gazette was withdrawn. It has to be reintroduced, and the minister has already commenced with that exercise, and it will be issued. And the discussion with the banking industry has already been done. in that working group, so they know exactly what is coming. After they raised concerns, the minister did meet with them, the department met with them, and there was an understanding of the process that will follow. So that part is done. On the report, yeah, in due course, I think the report can be made available to the committee once, of course, the NCR is convinced that all matters of prejudice don't exist in offering that report, but I don't see why the report would not be made available to you. I should also make the point that, Honorable Jones, you're reminding me now that there's a whole debate about what is the level of interest rates that should be considered usurious and what level is considered reasonable and just. But again, that's what the NCR has to attend to, together with the wider stakeholder groups in the credit market, to see how best we intervene, including curbing the exponential growth of the so-called mashonisas as well, as a function of the credit rationing that other households are experiencing in the market. But yeah, thank you.
Thank you very much, colleagues. I think we have exhausted all our issues. Let's thank the Deputy Minister, the leadership of the NCC, the leadership of the NCR, and as well as our colleague in Parliament. We have a very much vested interest in these two institutions because they represent the interest of our people on the ground at any given time. As we have said in the last few minutes, Honorable Deputy Minister, that we do believe that a case exists for these two entities to be to receive additional funding so that they can do much more work to ensure that the poor and the vulnerable are saved from the capitalist market that we are confronted with. With those few words, I would like to take this opportunity to adjourn the meeting, and so that we can allow members to prepare and for budget speech. Thank you very much. The meeting is closed.
Thank you, Chair. It's been a pleasure. Bye.
Thank you, Chair.
Thank you, Chair.
Thank you.